Hi, this is Mark the Meerkat with Grok Trade with the trade of the day from the Grok Day Trading Chat Room. And it was on a WBT. Here it is after opening, and it was up big on the day. It was up over 20%. And then here after opening, it popped up and was doing did a bull pullback, popped up, and is doing another bull pullback, and that was when it got our attention. It went up here, and after the bull pullback, it was actually starting to high base. Now, if you want to know more about what these trading patterns are that I'm talking about, you can go to our free site of freeonlinetradingeducation.com. That's right, freeonlinetradingeducation.com, and then right up at the top here it says Chart School. So go to our free Chart School, and it's free. That's the key part there, right? And here are the different trading patterns that we trade in day trading and in swing trading and long-term position trading. They give the odds in your favor. So this, I said, was doing a bull pullback, so it's a bullback buy, bullback sell. So he has a picture of it here, and then it also has a description of it, and then some charts about what they look like in real charts down below. And I said it started to do a bull pullback, but then it started to do a, let's see, let's go to the chart school patterns, and let's go to the high base right here. So here's the high base that after it did a little pullback. It's high basing up here, just starting to form that, and was just under $20 on this chart. So here's the definition of it again, and here you can see some different charts where that actually occurred and then took off and what happened after that. So that is, again, a free online tradingeducation.com to our free chart school. So here we are back here at this is that high base here. That's just under the $20 mark. So I set a trade just above the $20 mark here and let the trade come to me. And let's see what happened next here. And boom, there it goes. Look at that. Popped right up here and got me in at $20.03 was my entry. And automatically I have an attached stop that gets activated exactly 1% behind. So at 1983 as my active stop right there, that 1%, and it popped up here about just over 1% here, and now starting to base here under this 2050 area. And so I went ahead and I set up a half order to take out. My rules say if it stalls in the line of support or resistance, then I'll take out a partial and give the second half a chance to run up higher. And so I went ahead and I set that up. And I did get out half here at $20.44. I sold half for 2% on just the first half. Second half, then I changed the number of shares in my stop, brought that up to break even immediately. So I have a guaranteed income trade here of at least 1% because I have 2% in the bank, and I got a break even stop here. So let's see what happened after that. It's starting to rise up here, and this is a nice slow cooker. Now, the market lately has been super chop, and today was after this trade was no different. But I'm going to bring my stop up here now. I'm going to follow this 8 EMA up just underneath that 8 EMA. I'm out up here. I have that 2% locked in here, so I'm going to bring it up here to like 2062. I'm up here. This is over 2% in the money from where my stop is. As it's starting to stall here right under what? The $21. Okay, guess what? These even dollars seem to be major resistance. What a surprise. Not really. If you've been in our mentoring training, you know it. Those even dollar amounts can definitely be resistance. There, it just broke out from it. And look at the volume that came in when it broke out. Beautiful. Over 1 million shares. The largest. Look, that's the largest of the day as far as volume bar. Over 1 million shares on that. I'm bringing this up underneath here. Right under this 21, around 2184 area, right where that just tagged below the 8 EMA. And let's see where it goes from there. Okay, now it's starting to high base up here, and now I'm going to switch over here to that 20 moving average. Start going to follow up there, staying below the 21 even dollar, and look at that. It came back and tagged 21 even perfectly, and then bounced right back up, and then look at that. I kept my stop right there, and I got stopped out at $20.81 for 3.9% on the second half. So let's take a look at this total trade. It started to do a bull pullback, but then it stalled under the even dollar amount, and then it was starting to form a high base. So I set up a trade. When it broke out, I ran up here. I took out half when it stalled at the 2050 area. It stalled again at 21. Tightening up my stop, popped up above it, and then I was using the 20 moving average here, and then it dropped right below the 21 even dollar and right through the 20 moving average to stop me out. For it, the total trade was for 3.0% in 21 minutes. Hoo-ah! Now that was a nice, slow and steady one. But that has not been the type of trades we've been getting lately in the markets. It's been very choppy intraday and within a candle. And these are 1 minute candles. Again, these principles are whether it's a daily chart or a 1 minute chart. But the problem we've been having intraday lately has been it will break out, but then to suddenly have a candle come down 1, 2, 3% sometimes in just a flash. I had several of those happen today. They dropped back 2%. One dropped back 4% in less than 30 seconds. Very tough when you have a 1% stop to manage that. So if you want to see what we did in the Grok day trading chat room today, here we are. This was trade number 3, the one I just showed you here, and it. But after that, after we had that 3% trade, look at it. 0.5 minus 0.9, 0.7, 1%. I did get a 1% on that one a little bit later. Other than that, everything else is 0.8 or less, upside, downside, and even break even. So they started to snap back on us, as we call it, and so it's been a little difficult here. This week here, we're running a little bit behind our targets, but for the year we're way above our targets. So again, you have to pull back and look not just how you're doing on one day or one trade, but pull back for the week and all. We were 7 out of 13 today for 53% success rate. But here was what kept us from making some money today. Our actual reward risk ratio minimum target is 1.6 to 1, which means that for each average income trade, I'm making $1.60 versus the average expense trade. For every dollar I lose in an average expense trade, Dow is only at 1.3 to 1. It's very short of our 1.6% minimum. And then our target for the day is 5%. That's 5% of what we have at risk. So if you have a $10,000 lot size and a 1% stop, you'd be risking $100, but for every 1% you net, you make $100. So today we were just 2.2%, made about $220 in the first 2 hours of the market. Not bad, but about half of as much as we normally do. And that this week has been struggling. Now on Monday we had a lesson day because I was teaching the 301 mentoring class students, and we came into the chat room and just did it in sim trading, so it doesn't count for statistics. So again, we're just at 4.7 for the week so far, but we still have another 2 days to trade, no problem. Well, this is Mark the Meerkat. Hey, just remember that if you trade like a reckless hero, you'll end up with 0. Trade well, and may your winners run.